Hello everyone, welcome to lecture 3 of Debentures. In the last lecture we started with the topic of redemption of debentures and we already covered the conversion of debentures into equity shares entry. Now today we will be taking up with the second part, that is how to redeem the debentures by various options, like you may give them cash, equity shares, preference shares or debentures. So all of you give the heading in your notebooks by various options. Okay, B point by various options. Give the heading in your notebooks. B method by various options. In the summary, all of you give this heading in your notebooks. Now, here again, the first entry, that is of redemption of debentures, will remain exactly same as we studied in conversion. If you are going to redeem at par, then debentures account debit to debenture holders account. If you are going to redeem at premium, then debentures account debit, premium on redemption account debit to debenture holders account. Okay, so first entry for redemption of debentures is going to remain exactly same. All of you write down for redemption of debentures. For redemption of debentures, this entry is going to remain exactly same as earlier. Okay, as we have studied in part A, that entry is going to remain same. I repeat, if it is going to be redeemed at par, debentures to debenture holders at premium, then debentures premium on redemption to debenture holders. Now, for payment, what will be the entry? Understand it. Since we are giving them various options, very first, debenture holders are the receiver, debit the receiver. So, debenture holders account debit. Okay, I repeat, debenture holders are the receiver, debit the receiver. So, debenture holders account debit. Now, if you are giving them, what all various options can we give them? Okay, what did we study? What all various options can be given to them over here? We said we can give them cash or we can give them equity. Okay, or we can give them preference shares or we can give them debentures. So these are the various options which we can give to them. So if we give them cash, then cash goes out, credit what goes out, or bank is the giver, credit the giver to bank account. Or if we give them equity shares, then to equity share capital account. Okay, and obviously if you give them equity shares at premium, then you'll also credit security premium account. If you give equity shares at discount, then you'll also debit share discount account, as we studied even in case of conversion yesterday. Then if we give them preference shares, then you'll have to preference share capital account. And exactly same way, if you give preference shares at premium, then you will also credit to security premium account. If you give preference shares at discount, then you'll also debit to share discount account. And last option, if we give them debentures, then in that situation we'll directly credit the new debentures to debentures account. And again, debentures, if you give at premium, then you'll credit to security premium account. If you give debentures at discount, then you'll debit discount on debentures account. So these are the various options which may be given. First entry will remain same virtually, second will also remain same. But in conversion, we were giving them only equity shares. Whereas here, in addition to equity shares, we are also giving them cash or preference shares or debentures. So otherwise, the entry remains exactly same. I hope everyone would have written this in your notebooks. So take out question number 5 of your study material. All of you take out question number 5 of your study material that is related to this redemption by various options concept that we'll study today. Look at question number 5. MNO Limited redeemed 6,012% debentures of 100 each on 31st March 2018 at a premium of 5%. Be careful, the debentures are to be redeemed at a premium of 5%. So that first entry, what will be passed as we discussed? Since they are to be redeemed at a premium, debentures account debit as a liability, it's a credit balance, to close it will reverse and debit. Premium on redemption account debit, that is also our liability. To close it, will reverse and debit to debenture holders account. Okay, because they are redeemable at premium. Debentures account debit, premium on redemption account debit to debenture holders account. The premium on redemption should be written off using the balance of security premium account. Since it is given we have to write off the premium from security premium account, premium on redemption, it means in past we have not written off the loss on issue of debentures. So this premium on redemption itself will write off like we used to do in redemption of preference shares. That way this premium on redemption we will write off from security premium account. So that one more entry will be passed, security premium account debit to premium on redemption account. Okay, I repeat, when they say the premium on redemption should be written off using balance of security premium account, it means in past the loss on issue of debenture to premium on redemption entry has not been passed. Loss on issue has not been written off from security premium. So this premium on redemption now we will write off from security premium directly. The company offered 3 options to debenture holders as follows. As I said, by various options the company is redeeming the debenture. So company has given option 1 of 13% preference shares of rupees 10 each. Now at rupees 12 means we have given them the option that will give the preference shares to them at a premium of 2 rupees. When they say 10 rupees but at rupees 12, it means we are giving them preference shares at a premium of 2 rupees. Okay. Further, option 2, they say 14% debentures of 100 each at par. So second option, we are giving them the debentures at par itself. And then option number 3, they say redemption in cash. So 3 options we have given them, because if equity shares here, it's not included, because if you give equity shares, then it is as good as conversion only. Conversion we already studied in the last lecture. So here 3 options are given to debenture holders. Either they can take preference shares, or they can take debentures, or they can take cash. Now what options are exercised by the debenture holders? The options were accepted as under option 1, that is preference shares is taken by holder of 1800 debentures out of 6000 debentures. Out of 6000 debentures, 1800 debenture holders have taken option 1, that is preference shares. Then option 2, that is debentures, is taken by the holder of 2200 debentures, and same way option 3, that is new debentures, are taken by the holders of 2000 debentures. You can cross check what is this 1800 plus 2200, 4000 plus 2000, 6000. So this is how the 6000 debentures are going to be redeemed. 1800 debenture holders accept to take preference shares, 2200 debenture holders accept to take debentures, and 2000 debenture holders accept to take cash. Okay. Now we shall see the entries in detail. What is asked in the question is, the redemption was carried out by the company. Show the journal entries. Ignore debenture interest. So directly redemptions entries only we have to show. All of you can make a format of around 1 page or 1.5 page rather, and workings will also be done. Like yesterday we did the number of equity shares calculation. Amount payable to debenture holders divided by issue price of equity shares. Same way we will do the calculation for number of preference shares and number of debentures also. So that workings will also be involved. Ideally 1.5 page format you can make, and wherever workings are required we'll do it below the same. Pause the video and make this format. I hope you all are done with the formats. Now the date is 31st March 2018. So all entries will be passing on 31st March 2018. Only one common heading can be given. Now first entry, okay, first entry what we have to pass is for redemption of debentures. Since they are to be redeemed at premium, the entry will be 12% debentures account debit, premium on redemption account debit to debenture holders account. I repeat, debenture is a liability, so to close it we reverse and debit. Premium on redemption is a liability, so to close it we reverse and debit. An amount is payable to debenture holders, credit the payable to debenture holders account. Now Debentures with face value always. So face value, all can see 6,000 debentures are there. 100 is face value. Means debentures amount will be with 6,000 into 100. Okay, debentures amount will be with 6,000 into 100, that is 6 lakhs. And premium, they are going to be redeemed at a premium of 5%. 5% premium means here premium is 5 rupees. So same 6,000 debentures, the premium will be 6,000 into 5. That is 30,000. And then to debenture holders, what we have to pay is 105 rupees. 100 of face value, 5 of premium. Means total amount what we have to pay to debenture holders is this 100 plus 505. So that comes to 6,30,000. Being 6,000 debentures redeemed at 5% premium. I hope everyone is clear with this. Now second entry. They say that we have to write off. Okay, we have to write off this premium on redemption from security premium account. So for that we'll pass the second entry. That would be securities premium account debit to premium on redemption account. Okay, security premium we will use in writing off. So this premium on redemption we will close and debit, we will close and credit with 30,000 rupees. Okay, the security premium we will close and credit with 30,000 rupees, and security premium will also be debited with 30,000 to write it off. Being premium on redemption written off. Now further, now we begin with the redemption process. Okay, so here first option, that is preference shares, is taken by 1800 debentures. Now before we pass the entry, since they are issued at premium 2 rupees, first we will have to make the workings and find out the number of preference shares to be issued. Okay, we will have to make the workings and find out how many preference shares are to be issued. So all of you give the heading workings after the format, and first workings what we will be doing is, okay, first workings what we will be doing is for number of preference shares to be issued. First option, you all can see this yellow highlighted one is preference shares, and that yellow highlighted one, first option, is taken by 1800 debentures. So how to find number of, until you get the number of preference shares to be issued, you cannot pass the entry of its payment. So number of preference shares to be issued is equal to, as we did the formula in conversion of equity shares yesterday, same formula, amount payable, okay, amount payable to debenture holders, amount payable to debenture holders divided by issue price of preference shares. Amount payable to debenture holders divided by issue price of preference shares. Now here what amount is payable to debenture holders? Can you all see that the amount payable is 6,30,000? Yes, can you all see that or not? What is the amount payable to debenture holders? 6,30,000, right? Wrong! No, this 6,30,000 is payable on 6,000 debentures. This 6,30,000 is payable on 6,000 debentures, whereas first option is taken by only 1800 debentures. So if I ask you, do we have to pay 6,30,000 to the holder of 1800 debentures? No, we have to pay 6,30,000 to the holder of how many debentures? 6,000. Okay, but we know 100 plus 5, we have to pay 105 rupees per debenture. I repeat, 100 of face value plus premium of 5, we have to pay 105 rupees per debenture. So like we obtained 6,000 into 105, 6,30,000. In the same manner, can we find what amount is payable on 1800 debentures also or not? So that we will do over here On 1800 debentures, what will be payable? 1800 into 105. Don't take that 6,30,000. We are finding number of preference share to be issued. Preference shares are issued to the holders of only 1800 debentures. So 1800 debentures, what will be payable? 1800 into 105. And what is the issue price of preference shares? 12 rupees. Okay. What is the issue price of preference shares? 12 rupees. So 1800 into 105, the amount payable is 1,89,000. 1800 into 105, the amount payable is 1,89,000, and then divided by 12. So how many preference shares would be issued? 15,750 preference shares will be issued. Okay. So that's why we have to make this workings. Now based on this 15,750 preference shares will pass the entry. Debenture holders are the receiver, debit the receiver. Debenture holders account debit. And then we are giving the preference shares at premium. So preference shares is payable, credit the payable. Preference share capital account with face value. And securities premium is our capital profit. Credit all incomes and gains. So to securities premium account. I repeat. What will be the entry for giving the preference shares? Debenture holders account debit to preference share capital to security premium. Now, as we discussed just now, debenture holders 1800 into 105. So what amount is payable to this 1800 debentures is 1800 into 105, 1,89,000. Then preference share capital. How many preference shares are issued? 15,750. What is the face value of preference shares? 10 rupees. So preference share capital with what amount? 15,750 into 10 rupees, that is 1,57,500. And security premium with what amount? Same 15,750 preference shares are given at premium of 2 rupees. So same 15,750 preference shares into premium of 2 rupees. Okay, so that would come to 31,500. And you can cross check 1,57,500 plus 31,500 comes to 1,89,000. So before you pass the entry of giving them any security, first you'll have to make the workings and find how many number of that preference shares or debentures are to be issued. Being 1800 debentures holders accepted 15,750 preference shares at rupees 2 premium. Okay, at rupees 2 premium. So this entry is done. Now same way, in the same manner, second option, 2,200 debenture holders, this blue one, have taken the new debentures of 100 at par. Now since they are taken at par, no need to make the workings and find the number of debentures to be issued. Since they are taken at par, directly we can do it in the journal entries itself. Workings are required only if it is issued at premium or discount. So again, debenture holders are the receiver, debit the receiver. Debenture holders account debit. And now we are giving them new debentures at par. Which debentures we are giving them at par? 14% debentures. So to 14% debentures account, okay, we are giving them 14% debentures at par. So to 14% debentures account. Now exactly same way as I explained you just now. How did we find the amount payable to 1800 debenture holders? How did we find that? 1800 into 105. See, even in the workings, 1800 into 105. So in the same manner, if I ask you, what amount would be payable to 2200 debenture holders who have taken new debentures? Then can I say 2200 into 105? What amount would be payable? 2200 debentures into 105. That is 2,31,000. Okay, what amount would be payable? 2,31,000. And same amount will come into debentures account, 2,31,000. But you can say you are giving them debentures at par. So we did not make the workings. Directly you can do it here. 2,31,000 divided by 100. How many debentures would be issued? 2310 debentures would have been issued. Okay, so no need of workings for this. Directly you can say here being 2200. Okay, now 2200 debentures holders accepted 2310 14% on new debentures at par. Okay, we have given them the new debentures at par. I hope everyone is clear with this. Now, further, fifth entry. Last option, they say holder of 2000 debentures in green, they have taken cash. So in for cash also workings are not required. We cannot find the number of cash to be issued. Cash is cash itself. Debenture holders are the receiver, debit the receiver, debenture holders account debit. Okay, debenture holders are the receiver, debit the receiver, debenture holders account debit, and bank is the giver, credit the giver to bank account. Now exactly same way if I ask you what amount would be payable to 2000 debentures, then what will you say? 2000 into 105. Per debenture we have to pay 105 rupees, so 2000 into 105. What does that come to? 2000 into 105. We will have to pay 2,10,000 rupees. Okay, 2,10,000 rupees. Same amount will come in bank account, 2,10,000. Here you'll simply write the narration being 2000 debentures holders accepted cash, and then we'll do the total, final total. So 6,30,000 plus 30,000 plus 1,89,000 plus 2,31,000 plus 2,10,000, that is 12,90,000. Okay, final total of journal would be 12,90,000. So these are the journal entries that will be passed, and you all can see again that debenture holders we have credited with 6,30,000. They get closed with these three entries: 1,89,000, 2,31,000, and 2,10,000. All of you cross check. What is 1,89,000 plus 2,31,000 plus 2,10,000? Do you all get this amount of 6,30,000 or not? So 6,30,000 of debenture gets closed with these three entries when you give some of them preference shares, some of them debentures, and some of them cash. Okay, so exactly same as what we did yesterday, but the only difference, yesterday conversion means it gets converted only into one security, that is equity shares, and today instead of equity shares we are giving them new debentures, we are giving them preference shares, we are giving them cash, but the concept of passing the entry will remain exactly same. Now bring back the summary, go back to the summary. We'll take up with the new point of debenture redemption reserve. Third method of redemption, that is debenture redemption reserve. Now, the concept of debenture redemption reserve is that as per the Companies Act 2013, okay, as per the revised Companies Act 2013, 2 points you all have to remember which will affect our journal entries also. Number one, minimum means at least, okay, minimum 25%, okay, minimum 25% of, you can say nominal value or face value. What do you mean by nominal value here? Face value. Minimum 25% of the nominal value or face value of debentures to be redeemed. Minimum 25% of nominal value or face value of debentures to be redeemed must be transferred to debenture redemption reserve. Okay, must be transferred to debenture redemption reserve before the redemption commences. Okay, debenture redemption reserve. All of you must be writing this in the summary. Before the commencement of redemption. Now this is for the listed as well as unlisted companies, and there are some relaxations for finance companies, banking companies, non-banking finance companies. They don't have to transfer this minimum transfer 25%. There the percentage is nil. But generally, other manufacturing and all the other joint stock companies, maximum of them, minimum 25% of nominal value of debentures to be redeemed must be transferred to the debenture redemption reserve account before the commencement of redemption. And one more condition of Companies Act is there, that is minimum or at least 15%. Okay, minimum or at least 15% of again the nominal value or the face value of debentures to be redeemed. Okay, debentures to be redeemed must be invested. Okay, generally you must invest them in government securities because they are safe and secured. So it must be invested in safe and secured, or you also call them as gilt-edged securities. Okay, you also call them as gilt-edged securities, that is government securities. Must be invested on or before 30th April. On or before 30th April, immediately preceding the redemption. So you will have to see which 30th April will come immediately preceding the redemption. For example, if debentures are going to be redeemed on 31st March 2021, then 30th April before that would be 30th April 2020. I repeat, which 31st, if the debentures are to be redeemed at 31st March 2021, then which 30th April will come before 31st March 2021? 30th April 2020, because 30 April 2021 will come after that. After the redemption of debentures, there is no point in investing the money. So the company's loss condition is that, okay, before you redeem the debentures, 30th April, whichever 30th April falls before the redemption, by that date, minimum 15% of your nominal value you must have invested. So this is important. 25% amount must be transferred to debenture redemption reserve, and minimum 15% of the nominal value must be invested, and that too by 30th April latest, before the redemption begins. So accordingly, what entries we will pass, understand it. For transferring the profits to debenture redemption reserve, for transferring the profits, okay, to debenture redemption reserve, the entry will be, since you keep aside the profits and transfer to debenture redemption reserve, you will debit it to profit and loss account. So for that the entry will be profit and loss account debit. Okay, profit and loss account debit, and you will transfer it to debenture redemption reserve account. Okay, profit and loss account debit, and you will transfer it to debenture redemption reserve account. And for the second one, that is 15% amount which must be invested. So for investments, the entry will be debenture redemption investment account debit, debenture redemption investment account. You are purchasing the investment, so investments comes in debit. What comes in debenture redemption investments account debit, and you pay the money. So cash goes out, or bank is the giver, credit the giver to bank account. Okay, but this investments are to be done by 30th of April before the redemption, and transfer to debenture redemption reserve you'll do on 31st March only, at the end of the year when you make profit and loss statement. Okay, this entry is to be passed on 30th of April, and this entry will be passed on 31st March. So it may be possible that this entry comes first and this entry comes second. because we have to invest on 30th April before 31st March. So maybe your investment is done on 30th April 2020 and you transfer the money on 31st March 2020. Okay, but important point to be remembered is transferring will be done on 31st March, but investments have to be done on 30th April before the redemption begins. And then one more point what you can remember is after the redemption, okay, after you do the redemption of debentures, then balance of debenture redemption reserve must be transferred to general reserve, because now once the debentures are redeemed, then you don't require the debenture redemption reserve. That account must be closed. So whatever balance stands in debenture redemption reserve account must be transferred to general reserve, so that now you can use that money for any purpose of the company. General reserve means you can use it for any purpose. So after the redemption of debentures is done, then the balance of debenture redemption reserve will be transferred to general reserve. So what entry we will pass for that transferring the balance to general reserve? Debenture redemption reserve which we credited, to close that we will reverse and debit. Just now in the first entry, debenture redemption reserve account was credited. So to close that we will reverse and debit. So debenture redemption reserve account debit, and we transfer it to general reserve. So to general reserve account. Okay. Further, the redemptions entries will come because we are going to redeem the debentures. For redemption, the entries are going to remain exactly same. I am not making you write that. Means for redemption at par, debentures account debit to debenture holders, debenture account debit premium on redemption to debenture holders, and then for payment, now you'll be paying them money only, cash only, so debenture holders account debit to bank account. So these two entries of redeeming the debentures on whatever date of redemption it is, those are going to remain same. And after you pass those two entries of redemption, which two entries of redemption? These two entries of redemption. After that, whatever balance remains in debenture redemption reserve, you will transfer to general reserve. So three new entries are to be understood over here. What will be the entry for transferring the money to debenture redemption reserve? Profit and loss account debit to debenture redemption reserve. What will be the entry to make the investments? Debenture redemption investment account debit to bank. After that, the redemptions entries are going to remain same, two entries of redemption. And then what entry will you pass to transfer the balance of debenture redemption reserve to general reserve? Debenture redemption reserve account debit to general reserve. So now all of you look at question number 6, which is based on this concept of debenture redemption reserve. Understand it thoroughly well. We'll pass the entries for it. PQR Limited issued 15,012% debentures of rupees 100 each on 1st April 2013 at a discount of 5%. They are issued at a discount. The debentures are issued at a discount of 5%. Okay. And then they say they are repayable at a premium of 10%. So these entries we already studied in the very first lecture. Issued at discount, bank account debit, discount account debit to debentures account, repayable at premium, loss on issue of debentures account debit to premium on redemption account, and we'll combine the two entries. So bank account debit, discount on debentures account debit, loss on issue of debentures account debit to debentures account to premium on redemption. After 5 years, now how they have to be redeemed? After 5 years, and out of the profits of the company, means when you redeem out of the profits, minimum 25% amount you have to transfer to debenture redemption reserve. That condition is to be fulfilled. Whenever you redeem out of the profits, then minimum, okay, minimum 25% must be transferred to debenture redemption reserve. All of you underline this out of the profits and write this down. On this day, the balance in security premium account was 3 lakhs. So that security premium will be used in writing of discount as well as loss on issue of debentures. Okay, so that entry will also be passed in the beginning. Now on 31st March 2017, okay, on 31st March 2017, the balance in debenture redemption reserve was rupees 3 lakhs. Means we have already created debenture redemption reserve in past. With what amount we have created already the debenture redemption reserve in past? 3 lakhs. But what is the company loss condition? We have to create how much amount? 25%. Let us check. Have we created 25%? 15,000 debentures are there of rupees 100 each. Means, can I say debentures are of rupees 15 lakhs? Now this 25% amount we have to transfer to debenture redemption reserve. What is 15 lakhs into 25%? 3,75,000. So have we created reserve of 3,75,000? No. We have created the reserve and there is a balance in reserve of only 3 lakhs. So how much is the deficit still required before you do the redemption as per the company's law? 75,000. Okay, I repeat it once again. If not clear, all of you can rewind and listen to it again. There are 15,000 debentures of rupees 100 each, means 15 lakhs is the face value. And just now what we studied, if you redeem out of the profits, then the condition of company's law is that minimum 25% amount must be transferred to debenture redemption reserve. So what is that? 15 lakhs, 25%, 3,75,000. Now, by now, 31st March 17, when we have to redeem the debentures, how much is the balance in debenture redemption reserves account? Only 3 lakhs. So have we transferred 3,75,000 by now? No. What is the deficit? 75,000. This further we will have to transfer to debenture redemption reserve in the current year so that we have a balance of minimum 25%, that is 3,75,000. And then they say pass journal entries at the time of issue and redemption of debentures. We have to pass the entry of issue also and of redemption also. So all of you, and it's clearly given, ignore the debentures interest. So as such, that point is not covered in your syllabus. So mentioned or not, you're going to automatically ignore the debenture interest. They're talking about this 12% interest. Ignore that. Ignore that means for interest on debentures also entries are there. Interest account debit to debenture holders account, then interest account debit to bank account, we close interest and transfer to P&L account. Those entries are not supposed to be passed. Pause the video and make this format of journal entries in the books of PQR Limited. All of you do it fast. Okay, I hope everyone has done it. Now first we'll pass the entry of issue on 1/4/2013. So all of you write down 1/4/2013. Now debentures are issued at discount and redeemable at premium. So first we pass the entry of issue at discount, leaving one line in between. Okay, so bank is the receiver, debit the receiver, bank account debit, then they're issued at discount. So discount on debentures is a loss, debit all expenses and losses, discount on debentures account debit, then leave one line in between, and then to 12% debentures account. Now what did I tell you earlier? First you record the amount of debentures with face value. 15,000 debentures are there, 100 rupees is the face value. So first you record the amount of debentures with face value. 15,000 into 100, that is 15 lakhs. Then you record the amount of discount. Now discount is 5%. So 5% of 100 rupees will be 5 rupees only. So same 15,000 debentures, what will be the amount of discount if you count 5 rupees? 15,000 into 5, 75,000. Now 15 lakhs minus 75,000. What amount are we going to receive from the debentures issue? 14,25,000. Or you can say 100 minus 5. What amount are we going to receive? 95 rupees. So even if you do 15,000 into 95, you get 14,25,000. Now they are to be repaid at a premium of 10%. 10% premium will be 10 rupees. So for redeeming the debentures at premium, what entry we have to combine as per the prudence concept? Okay, it is our loss, debit all expenses and losses. So loss on issue of debentures account debit, and in addition to loss, it is also our liability because we have to pay more amount when we redeem the debentures. So to premium on redemption account. Okay, premium is payable, credit the payable, so the premium on redemption account. How much premium is payable on the same 15,000 debentures? 10 rupees of premium. So this loss on issue to premium on redemption will do with what amount? 15,000 into 10. Okay, 15,000 into 10. that is 1,50,000. Loss on issue to premium on redemption will pass with 1,50,000. Being 15,000 debentures issued at 5% discount, redeemable at 10% premium. Now, same date 1/4/13, we have to write off these two things. Which two things? Discount also and loss also. What is the total amount? 75 plus 150, 2,25,000 to be written off. And what is the security premiums balance? 3 lakhs. So is 3 lakhs sufficient to write off 2,25,000 or not? Yes. If it is insufficient, we would take it from P&L account, the difference or deficit amount. But here it is sufficient, so securities premium account debit with 2,25,000. What is the total amount we will write off? 2,25,000. To discount on debentures account 75,000. To loss on issue of debentures account 1,50,000. Being discount and loss written off. So these two entries of issue are done. Now redemption is to be done on which particular date? 31/3/17. Okay, it is clearly given that we have to redeem the debentures on 31/3/17 after 5 years. Okay, after 5 years means 1/4/2013, so 14, 15, 16, 17, 18. We have to redeem the debentures on 31/3/18. Okay, I repeat, after 5 years means we have to redeem the debentures on 31/3/2018, and in the beginning of the year there is a balance of 3 lakhs in debenture redemption reserve. So in the order, before we redeem the debentures on 30 April 2017, we will have to make the investments. Okay, what did we study just now? We have to redeem the debentures after 5 years means 31/3/18, and before 31st March 18, whatever 30th April falls, by that date minimum 15% amount must have been invested. So which 30th April will fall? Before 31st March 18, 30 April 2017. So on 30 April 2017, we will invest minimum 15% of face value. So we'll purchase the investments. Investments comes in, debit what? Comes in. So debenture redemption investment account debit, and bank is the giver, credit the giver to bank account. What amount will invest? 15 lakhs is the value of debentures. Okay, 15 lakhs is the value of debentures. 15% of that minimum must be invested. So that comes to 2,25,000. 15 lakhs into 15%, 2,25,000 must have been invested by 30th April before the redemption begins. So being minimum 15% investment done. Being minimum 15% investment done. I hope everyone is clear with that. And then by 31st March 18, we will redeem the debentures. So even in redemption of debentures, what did we discuss? We must have 3,75,000 in the debenture redemption reserve, but we have only 3 lakhs. So 75,000 will be transferred to debenture redemption reserve to make 3,75,000. So profit and, as we studied the entry right now, profit and loss account debit 75,000 to debenture redemption reserve account 75,000, being minimum 25% reserves kept aside. Now after that we will redeem the debentures. Now all the conditions of Companies Act are fulfilled, so we'll redeem the debentures. So to redeem the debentures, first 12% debentures account we will debit and close with 15 lakhs. Premium on redemption account we will reverse and debit and close with 1,50,000. So total amount payable to debenture holders will be 16,50,000. Okay, 12% debentures account debit with 15 lakhs. Premium on redemption account debit with 1,50,000. to debenture holders account, what we have to pay them is 16,50,000. So this is the entry of redemption, being 15,000 debentures redeemed at 10% premium. Then on 31/3/18 we will make them the payment. So for payment the entry will be debenture holders are the receiver, debit the receiver, debenture holders account debit. What we have to pay them? 16,50,000 including the premium. Okay, what are we supposed to pay them is 16,50,000 including the premium. And then bank is the giver, credit the giver to bank account will pay them 16,50,000, being payment made to debenture holders. Now after the payment and redemption, what did I tell you? Last entry, debenture redemptions reserves balance will be transferred to general reserve. So this 3,75,000 of debenture redemption reserve will be transferred to general reserve. So last entry to be passed will be debenture redemption reserve account debit 3,75,000. 3 lakhs was already there, plus we transferred 75,000 in the current year. So now the balance in debenture redemption reserve is 3,75,000. That will be transferred to general reserve account. Okay, so these entries are to be passed as per the company's law, being balance of debenture redemption reserve transferred to general reserve. Now final total will have to be done. So what will be the total? First entry 16,50,000 plus second entry 2,25,000 plus again 2,25,000 plus 75,000 plus again 16,50,000 plus again 16,50,000 plus 3,75,000. So total would be 58,50,000. Okay. So these entries are to be passed as per the concept of debenture redemption reserve. Similar questions of examination, you all search it out, you'll find many questions, you all do the practice on your own. Next concept, the last concept of redemption by sinking fund method, will take up in the next lecture. That'll be all for this lecture. Bye everyone, take care, see you in the next lecture.